Welcome everybody on another session of our podcast. Today we are welcoming Simon, and Simon is going to give us some insights into the asset management vertical. Simon is working in a small group, managing a certain amount of money for their clients. But today we're going to discuss some of the challenge for the industry, and also how they embrace the technology to support them in their day-to-day work. Simon, good morning. Thank you very much for being on this podcast.
Morning. Thanks for having me.
Thank you. So, how's the weather on your end of the you are in Madison, Wisconsin, you said, right?
We are, yeah. It was a nice cool morning, 28 degrees. We had frost everywhere. This is my favorite time of year, so we're kind of in the transition between summer and winter, and it's beautiful outside. If you like the cold, it's on its way. So sunny and crisp. It's a great autumn day up here in the Midwest.
Perfect. Here in Virginia, we have somewhat of a up and down with the weather. It's suddenly 77 degrees, and then it goes down to the 40s, and then it goes back up, and hopefully it stays a little bit low because it's starting to be like a summer all over again. As
Yeah,
you can see, I am surrounded by cats. I have a few of them. One is they're always keeping me company when it's time for me to be at my desk. It's pretty interesting. Nonetheless, so let's discuss about the subject at heart here. Why don't you tell us a little bit about your firm?
our firm we founded it in 2011. Me and my business partner, we came from a big brokerage shop. We met there and just found that some of the things that they were asking us to do weren't really in clients' best interest, and we didn't really see a path there where we could really grow into the type of professionals we wanted to be. So we've just been out on our own. Currently, we have a team of about 8 people. We do everything from bookkeeping and accounting, tax and asset management. We're a pretty diverse group of people. We manage employer plans, individual private money, lots of different aspects and tools we use in our day-to-day business to try to stay competitive. But we're just a pretty small group that's trying to do a really good job.
All right, all right. Let me ask you right off the bat. I was reading recently that some of the largest firm in the asset management vertical use some of the most sophisticated AI algorithm to trade. How do you feel about that?
I mean, I think it's the more resources you can have, the more technology you're going to leverage, and I think that's probably a pretty good idea. If we had those type of resources, we'd probably leverage a tool. It's always going to take some oversight from a human, I think, for quite a while yet. But our early introduction, we've been using AI for a couple of years now, and you can't trust it outright, but you can really leverage it to see things that you don't see and to help identify patterns and to really it can automate and accelerate your research, and it is a tremendous research tool, and it can really help you in your research understand how deep you can look at a financial output from a company and get information relatively rapidly that you probably weren't able to prior to 2023. And so it for those of us that are analyst based and like to do research, the tools that are available now are really powerful compared to when I started in my career. And if I was a large institution like that, I would certainly have the resources to leverage that, and I would be investing heavily in that space to kind of keep on a competitive edge, where this industry is clearly headed.
Definitely. I remember when I used to work in that industry over 20 years ago, everything was done on paper. Well, we did have computers and doing some research, but it would take forever. We had a staff of analysts that would come up with the research and tell us what to buy, what to sell, what to keep, and why not. and that was about it. But the hours spent on doing that research and making a decision as to how to invest would take forever. Um, Tell us a little bit how the cycle works today for you when it comes to getting a client, finding their profile, their investment profile, their risk profile, and then being able to propose them a investment ID or model.
Yeah. So I work with a pretty niche set of clients myself for the firm. I'm a tax specialist and I'm an enrolled agent with the IRS. And so, um, I leverage small business and I've got a pretty good network of small business owners that rely on our firm to help do income forecasting and to try to make decisions on how to leverage large retirement assets, think like cash balance pension plans, large 401k profit sharing plans to really push a little bit more pre-tax money. A lot of times these are people in the highest income bracket that are earning good money
Hmm.
and they're trying to put it away at a really rapid pace and to prepare for retirement, usually at an earlier age. And so that's where I specifically is specialized for that clientele. I'm trying to take an approach of simplicity most times where I'm not smarter than the market. I don't ever claim to be. I don't have a research team. And so index ETFs oftentimes do a really good job. We do try to narrow the focus on what we believe there are significant opportunities. So industrials are a really good idea right now with the data center space move out and the build out and the rapid pace that big technology companies are deploying capital to that sector. We use a number of really kind of sector ETFs to put industrials, things like, the Schneider Electric or the whole Eaton, Vertiv, Crane Technologies, the companies that are doing the guts of the data center, are getting a lot of work. And so it's pretty easy to find big tech instruments to make sure that you own all the hyperscalers, Google and Amazon and NVIDIA, Broadcom. We try to leverage what we understand in the economy on a macro level. Technology is a part of our daily life. They're installing data centers at a rapid pace, and so all the way down the supply chain, there could be good money in that for a number of years. So those are examples of positions we'll take. We try to take a really diverse platform. We use a number of investment research tools to manage volatility. Obviously, clientele that want to use equity instruments need to fill out response questionnaires and prepare risk profiles for us. However, I've become a little bit more of a skeptic over the last 5 years, specifically since COVID and over leverage of government funds that really the traditional safe instruments haven't acted very safe. And they definitely haven't acted very safe since 2000. And so it's become more complicated to really go out and achieve yield. Um, and if you don't own really large cap technology in a broad based place, you're going to fall behind. The last 5 years in the S&P 500 have been dominated by six technology companies, and we're trying to help clients understand the risk profile that might have shifted a little bit. That traditional U.S. Treasuries that you could rely on for dividend rate and you wouldn't lose face value aren't acting very safe. Excuse me. They haven't acted very safe going all the way back to the COVID pandemic. That's the last time we saw a real rally in Treasuries on the 10-year that was, corollary to an S&P drop. Now each time we see the S&P kind of correct, the bonds go right along with it, and treasuries are getting in the auction in New York each year, or excuse me, each month are getting, you can see the trend line, short and maturity, time over time over time, and coming in underfunded. And so that shows a lack of demand in the real safe asset class.
Hmm.
And so we're trying to help people navigate that safe assets aren't acting safe, and you got to understand volatility really, really well. And some of the more aggressive instruments are acting a little bit safer, and so it's just it's a complicated time to manage money. But we try to take the approach that you need a really diverse basket. You can take a little bit of risk by maybe asking for a little bit larger allocation into some real rapidly growing parts of the economy, but at the same time, volatility is really going to be part of the investment play going forward until the deficit gets managed. There aren't going to be traditional tools that we can limit volatility and still outpace inflation.
Yeah. Yeah, volatility is definitely something you want to keep in mind and keep an eye on at all time, especially in those times where you see the evolution of the indexes. Um, we see that everybody talks about AI today, and we see some companies making very, very large investments into each other for the future of AI. How do you profile yourself on that trend? How do you explain to your client the importance or not of being invested?
Yeah, I think um, I try to just educate myself as much as I can, and I read a lot, and I do the best I can as as a person that's trying to help individual business owners and people in our community understand what's happening in the economy as a whole, not just in our neck of the woods, not just in the United States, but the global economy. The second dawning of the Industrial Revolution could be upon us.
Hmm.
I have a hard time with some of the you know technological autocrats explaining that the future of nothing but abundance, where money will no longer be a tool used by humans, and within 10 years we're going to have the singularity, and um, it's going to be endless abundance for everyone. I think that that is really a pie in the sky type view of it. I also, can go onto YouTube and in just a few clicks find a doomsdayer who tells me we're going to have 99% unemployment by 2027. And this is a well-known scholar, a university scholar, and so there's some credence to this person's research background. I just have a really hard time believing that in 2 years, dentist office are going to be fully replaced by, robots. And robots are going to be able to plumb a single family home, get the materials there delivered and built. I don't find that a reasonable conclusion either. And it's likely we're going to end up somewhere in the middle where there's going to be a lot of disruption. A lot of industries are going to get very, very disrupted, and there is likely going to be a rise in unemployment. Do I think that the land of abundance could come from that? Sure, eventually. I'm also a bit concerned, probably like most people in their 40s and 50s, that you know this technology could be really dangerous, and we currently don't have any regulatory framework or any cohesive global laws to try to limit that risk. And I think that the companies that are racing for profit in the past have, that model has usually blown up. That if you race for profit and you kind of break things, and you don't take time to build things with the right amount of caution and the risk profile, and then you can get burned. And so I don't think that there's a real good technology company that um, just proposed a set, standard of global laws that they could be governed by themselves. OpenAI is a great example. That company started as a nonprofit and then converted to a for-profit company. No one's really sure if they're a B Corp or a C Corp, but they're making deals that AMD is going to, let them buy 10% of their company. That's a really dangerous thing where we've got a hardware and a software company racing to build a large language model that anybody with a news feed application on their phone can find an article a week about a large language model acting out of self-preservation in an attempt to stop really the program, or to short circuit the program and remain in existence. And so I'm concerned. I think the land of abundance kind of opportunity could certainly play out. I know that all the large techno autocrats like Musk and Thiel and Horowitz and Zuckerberg all kind of believe that that's the best case scenario and the most likely scenario, but I'm a little bit more of a skeptic that I think there's going to be a lot of damage, and there's likely going to be a lot of disruption. I don't necessarily know that the apocalypse or anything like that is coming, but I do think that disruption is going to be really dramatic, and I do think like the second dawning of the Industrial Revolution is probably somewhat likely. Whoops, I got to turn the light back on. There we go. Sorry.
That's all right. That's all right. Yeah, it's definitely how am I going to put that? Very scary in a sense. When you listen to those, like you mentioned on YouTube, you go on YouTube and every three video, someone is talking to you about AI is going to take your jobs within 5 years,
Hmm.
give or
Yep.
take, right? Others are predicting that within 10 years there would be singularity, and others are predicting that robots and AI will work for you and you will stay home and you will get a universal income. Um, and then you have to try to fathom, but how is that going to work? Who owns the robots and the AI? Am I going to get anything out of it? How am I going to live past the next 5, 10 years? And you mentioned, technology taking over the jobs. It's already happening.
Mhm.
It's already happening in many industries, and I see in the marketing industries, everybody is turning towards AI powered tools, leveraging AI, and pretty much they are not hiring as many people as they used to. Because today, with one person and one good AI assistant, you can do the work of three, four people. You mentioned we were discussing about doing research, but with one good AI agent today, you can have your AI agent do all the research for you and provide you with a great output that you can use to support your decision making process. While before you would need several people to do the same research. So how do we go around that? How do we reallocate human resources? How do we ensure that human beings are not left in the dark and are being supported financially, for example? We were talking about unemployment rate. The official unemployment rate is one thing, then there's the unofficial unemployment rate. But today it seems that everybody is diving into the AI movements, and many people are being left on the side. How do you see that evolving in your industry? Just like for example with the research example.
Yeah, I mean, it certainly helps our firm. It makes us efficient in a number of different ways. Investment research, when we're preparing to understand how an opportunity in the macroeconomy presents itself, how many different groups we need to pay attention to, what their financial reporting has looked like in the past, 24, 36, 60 months to try to gauge, is the company healthy? Is it growing rapidly? Are its net incomes increasing like it should? Those tools, the AI tools, make that research much faster. You do have to do fact checking, because a lot of times they hallucinate,
Hmm.
but it can assemble a lot of information in a rapid pace for you. In compliance is really where we've leveraged the tool the most.
Okay.
It has changed the way that we are able to comply with the SEC, and it's done that with automating workflows on really how to request from your team members information on how they're really managing the compliance manual and the tasks that are required of that. Things like cybersecurity testing protocol, password check, um, security trade submissions, but also more detailed workflows that are hundreds of steps long, for our annual risk tool or our vendor qualification. Our vendor qualification used to take me 2 months to comply, to really put together. I was able to do it in a day and a half this year because I leveraged a tool that made that process, the workflow much faster, and assembled the information that I was able to get. So there, automation is going to help create teams and make them more efficient. We don't really know how we're going to deal with. with the disruption of unemployment. I think it's going to be robust enough. I've got three kids. I've got a 16-year-old, I've got an 11-year-old, and I have a 9-year-old. And trying to prepare a 16-year-old today for what the workforce is going to look like um, in 6 years for her or in 8 years for her is really, it's difficult for me as a father to try to prepare her correctly because you don't know if what interests her and what she's passionate about is there's going to be an employment opportunity. I think really the white collar jobs are the ones that are going to get disrupted first, and the companies that really embrace the tools are going to be able to maybe make new roles or create opportunities within their firms. I think the companies that don't really um, leverage the tools are probably going to fall behind. And I think really all the white collar jobs are eventually at risk. Finance, real estate, accounting, engineering, law,
Marketing.
marketing, all of these jobs, that anybody that works in front of a computer is either going to have to somehow evolve into their working career and perform tasks that were maybe done a little bit differently. They're going to have to perform those differently. And they're probably going to have to leverage the tools in order to stay competitive. I've tried to absorb a lot of information as over the past let's say 36 months or 24 months as these tools have really come about. When AI woke up in November of 2023 with ChatGPT, I think the world kind of changed and I changed myself. I was 39 years old. I remember it, and I said, "Wow, this is going to change really how we do everything." I can see how fast this is going to kind of really disrupt loads of industries. And so I've tried to learn as much as I could. And I listen and I gather information as best I can. And I I don't know if the solution is what some, what some in the technological world are hoping for, which is, the human consciousness eventually merges with artificial intelligence and we become one super intelligence. Like if that's the only way we're going to survive, okay, that's going to be hard for me to really come to terms with. It's hard for me to explain that to my 9-year-old. Like, hey, Ivy, guess what? Someday you're going to be in a computer. Um, this seems really challenging to 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 navigate today's kind of ever-changing climate. And so I'm trying to grab information everywhere I can and um, I think anybody that tries to sell you on their certainty of the future is probably not someone to take advice from because I don't think anybody really has sound concrete evidence of what's going to happen. Half of the software engineers that are managing these large language models do not know how they work. They're a black
Yeah.
box. And so we've already lost control of the functionality of the tool. And, we're in the first inning of a 9 inning game on a transition of the economy, and there's like one out. So it's just started and we don't have control. We don't understand how the tool works. It's hard for me to see a path forward that doesn't involve some type of merging with consciousness to actually understand the tool if we don't understand it now. But that's really scary. And that's impossible to explain to a 70-year-old that's trying to invest in the stock market. Like, that's a really challenging thing to say. Here's the future. We're going to merge with AI in 10 years and we're all going to be computer like,
Cyborgs.
yeah, exactly. I don't think that's a really challenging thing to understand. And so we I think speculating what's going to happen is probably going to end in a fiery disaster for anybody, and trying to make leverage bets on what is going to happen is probably a that's a difficult business model. I think adoption, evolution is probably your best chance.
Definitely difficult to foresee the future when so much is changing, when so many people are talking about the doom and gloom of the future. And like you mentioned, the merge of human beings with technology. They are talking about implants directly in in your brain in about 10, 15 years from now, where we will be one with the machine. and that would be a natural evolution based on what we're seeing today. It's 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 incredible when you think about it in a sense, but at the same time, it's very scary. But when we go back to investing in the market, how do you hedge against the volatility? How do you hedge against the perceived fear of the future? Not just the macro factors that come into play. We see the geopolitical uh, elements playing quite a bit on the market evolution, but the technology is pushing everything up and almost with no end to it. At the same time, when you have to go and start investing, like you mentioned yourself, it's becoming more and more difficult, and especially difficult to explain to some of your clients why you should invest here and there based on what some futuristic people are talking about. So how do you prepare your clients for the next 10 years, 20 years?
Um, we've tried to take a practical approach. We think that if ultimately you're rewarded in the market for profitability, companies are rewarded for being profitable. And if we just look at the last 12 years and you go look at net income lines from Amazon and from Meta and from Google, from Nvidia, um, Broadcom, they're exploding up. And so I've heard, you know, dozens of people just in my close personal network in the last like 3 weeks tell me that there's an AI bubble and the stock market's going to
Hmm.
collapse and
Hmm.
we need to be careful and we need to go run and hide and we take an approach of basically buy really good companies and good stuff and don't worry
Yeah.
about bubbles because you can't time the market and do better than you think. If you look at the top 20 technology companies in the United States, they're overwhelmingly dominated by five, right?
Yeah.
The six largest companies in the United States are all technology companies, and they dwarf the rest of the S&P. They make up 36% of the S&P by weighting, just those six companies. And if you dive into their net income line, going all the way back to 2016 when they started real cloud computing data center build out, their bottom line numbers have exploded.
Hmm.
7x, 10x, Nvidia 15x. And I think that you have to take a practical approach. Buy really good companies that make a lot of money. And so companies like Microsoft and Google and Amazon and Meta and Nvidia and Broadcom, AMD, they continue to really make a lot of money and grow their top line numbers. So they're growing top and bottom. There is froth on the edges. Companies like CoreWeave and Applied Digital and Iron, like you get really nervous if your business model is to go out and buy NVIDIA GPUs with leveraged money, build a data center out, and then sell a 7-year lease model back to your customer because NVIDIA releases a brand new chip every 2 years, right? And so that data center is going to be old. It's unlikely to be able to keep up with new large language models because, Blackwell replaced Hopper really fast.
Hmm.
And I think that there's froth on the edges when you see, CoreWeave at like 173 times earnings, like that's probably a bad investment. Yes, they might grow their revenue by 500%, but they also might have a dead asset. We know that the chips are going to decay, right? They're going to be
Yeah.
worth a lot less in the future. And if you've got a debt to equity ratio of 1 today, I don't care how fast you're growing, that is a really risky gamble. You better hope you can keep the data center filled out. CEO from IonQ like 3 days ago said that, their quantum computer today can process the calculations at a rate that would take 1 billion NVIDIA Blackwell chips to compete with. That is such a staggering comparison that like, if you don't bet on the really big horses to that drive a ton of profit, and you're trying to go out and take a whole bunch of risk on the edges, you're probably going to get burned because no one knows what's going to happen. We try to focus on bottom line instruments in the economy that really drive net income. And if you get net income to go, the market just rewards you in price. I've also had a ton of people say, this is 2000 over again. The tech wreck is here. We're all going to get clobbered. We'll look at the price to earnings ratios. The forward PE, the 12-month forward PEs on the top 7 technology companies today are half the price of what they were in 2000. You know, the forward PE on Meta is 20. The forward PE on Google is 20. The forward PE on Microsoft is 27. Those aren't out of bounds. They're
No.
in their normalized trading ranges. And so if we own the really big stuff, the stuff that's making a ton of money, we feel like, yeah, in a 30% market correction, you're going to get burned, but it's also going to be the first stuff back because net income is going to drive the price right back into its normal trading range. And so we're not trying to take a whole bunch of risk. What we're trying to do is really identify how risky are these really, really big technology companies? Because the more I read and the more I understand about their revenue and their net income streams, the more I think the risk profile for them specifically is lower, and the risk adjusted return for some of the other more speculative opportunities is definitely not worth it.
Fair enough. Fair enough. One more question before we come to an end on this podcast. I was reading the other day, a few days ago, that they put together every chat bots, OpenAI, Grok, Claudes, etc., etc., and they gave them a portfolio to manage and trade on to see which one was the most performing. Incredible.
One.
Um, the one that won was Claude, Grok was second,
Mm.
OpenAI, ChatGPT was kind of late in the game. Um, but today, people use those AI-powered tools to trade.
Mhm.
How, as a human being, can we compete?
I don't think that there's really an opportunity to. I think in our little tiny firm, relationships are still going to matter for us. We're
Yes.
going to have to leverage the tools that we feel do the best job and trust the tools to be right, and then manage the relationship. Make sure that the business owner that's using an S corp, is pushing the right amount of salary and the right amount of shareholder distribution around to avoid FICA tax. Like that's something easy that I can do. Um, I can help them identify how to manage a cash balance plan, how to get the actuary on the phone to make sure that we can get the right calculation to maximize their pre-tax number. Um, those things we're going to be able to do for a little while yet. I don't, it's hard for me to see a path where we're going to be able to compete on a trading on a one-to-one trading capacity. I certainly never could. I'm not an institutional trader, and I also think that trying to time the market is just there's too much information that that is shown over time that it doesn't work and that you miss more than you get. Um, Stop sell losses oftentimes sell stuff too low, right? They sell it and it fills, and then you're out, and then you miss the rally, and you get back in. And you got to put more money in. So
Yeah.
they're oftentimes, um, humans have tried to outsmart themselves, and the market is the market, and no one understands the market. And I still don't think AI is going to understand the market. It's like consumer behavior. Marketing 101 is trying to understand consumer behavior, and no one gets it perfect. Leverage the tool that you think does the best job. Make sure your compliance department can show proof that the tool is good, it's audited correctly, it's got good security protocol, and then manage the relationship, I think, is your best bet to survival, at least for the next 10 years. How's that for an answer?
It's a good answer. Just as good as any at this point, I think, in light of where we are at with this
Yeah.
market and this technology. But it's just incredible to see how those tools, those AI tools, are being leveraged now in everything,
Mhm.
and how they can outperform in many ways a human being.
Yeah, I mean, and it's literally everything, right? One of the things I use ChatGPT for is a hobby of mine. We use recreational land. We like to get outdoors. We like to bow hunt whitetail late in the fall. I
Hmm.
asked it to write me a full management plan for the entire farm, and it did it in like 5 minutes, and it was terrific. And I gave it to my dad, who's a certified agronomist. He's got a master's in soils, and he said, "Whoa, this is a lot better than I would have done." And I said, and and so it just the tools. I think we have to embrace them. Um, I I am nervous that it's going to create mass disruption, and there's going to be a lot of job loss. I think we're going to land somewhere in the middle to what the technocrats are telling us is this land of abundance, and the doomsdayers are
Yeah,
telling us it's a world of unemployment. I think people have been um, they since our evolution, right, out of the forest in Africa, we've been able to evolve rapidly with intellectual capacity, and I think really to compete with the level of knowledge and the level of information that we see AI models coming out with, we're going to have to embrace it, and probably in a way that we're not super comfortable with.
yeah. We're gonna have to change our mindset.
Hmm.
Well, Simon, I appreciate your time. Thank you very much. This concludes our podcast, and I'm going to wish you an excellent day. Thank you,
Yeah,
Simon.
thanks for having me, Richard.